than your currency. Splurging millions, buying houses like Monopoly. Fucking 9 to 5, man, the money is a joke to me. Buying cryptocurrency, my money in the privacy. I make it rain dollars, they watch me disappear. I'm so fly, man.
Hey guys and girls, welcome to this week's episode of the No BS with Birchy podcast. I'm your host Nathan Birch, and this is the show unraveling the truth to the facade of the 21st century. We're now exiting the matrix and waking up to motherfucking reality. So thanks a lot for tuning in for another week's episode of the No BS with Birchy podcast. Today I want to talk and deep dive into property development. Do I do development? What is my take on development? Am I actively developing? And will I do developments in the future? Just a bit of a recap on sort of where we're at the moment, where I'm at with my property portfolio and where I want to go to in the future. For me, I've done lots of different things over the years. I have developed property. I have built properties. I have, moved houses to sites with, on the back of a truck. I've built granny flats, all that stuff. And, some things work, some things don't work. And I want to dive into, where I'm at specifically now and why I don't do specific things. So just as to a bit of a recap on where the portfolio is at, my portfolio is at about 230 properties in my buy and hold residential / just my normal portfolio is up to about 230 properties. And this year I've got up to 30 motels, hotels, pubs, and sort of accommodation and tourism sort of ventures. So in that portfolio, I've got lots of land. I've got big land holdings. I've got properties that could be earmarked for development sites, that could be good for development in the future, but I haven't developed those properties. And today I'm going to talk about why I haven't developed them, why I might in the future, and just my whole philosophy around it, because I see so many people that come in and they're like, I'm going to buy a block of land, I'm going to split the property in half, I'm going to build 2 houses on it, I'm going to sell it off and make some profit. For me, I have zero, when I say zero, I mean a big fat zero respect for money. I actually do not care about money. For me, I want to own assets. I like currency being the term that should be used. I do like currency, and I like it coming in the format of cash flow. So I like when money comes in my account, and I like to expend it straight away and buy more assets that are going to bring more cash flow through my portfolio. So I've, over the years, defined the portfolio as being, there's different investors out there. There's active investing, and then there's passive investing. Active investors have to go out there, buy a property, renovate it, subdivide it, do whatever they go to do, sell it off, and then they have to make that profit, and then have to go do the trick again. For me, I just buy the asset, it sits there, and it does its thing, it brings in cash flow, and keeps going up in value. Over the years, I've helped thousands of investors, like tens of thousands, and I don't actually know the amount of people that come in from the podcast, from the YouTube videos, from the Facebook videos, and all the education that I put out there, just for the fun of it, that have had some form of impact. But one thing I do know 100% for sure, and this is probably the biggest realization as to why I don't do development, is that we never have anyone call up at B.Invested and say, hey, Nathan, I bought a property in 2003. It cost me 300 grand. I did a reno on it, or I subdivided it, or I did a development, and I made $200,000 back in 2006 and sold the property off. The reason why is that property is probably worth 1.2 mil, 1.5 mil. People don't call us up and say, we're so happy we sold off an asset. People are like, I wish I had have held on to that asset. People are like, I wish I had have bought more assets. And that comes down to understanding how the currency works out there and how the money works. That's why I talk so much about the system, the money, currency, and how all those things and the nuts and bolts sort of fit in the mixture, because I have zero respect for money. When I say money, I mean currency. People call it money, but it's actually just currency. They keep printing so much currency that the value of it is losing, any sort of real value that it had. So the value of everything is rising because the value of the money is losing its value. You need more currency or more dollars to buy the same thing that you could in the past. So for me, across my whole property portfolio, I have the cash flow coming through. The cash flow is getting inflated. The value of the asset's getting inflated. But the debt on my asset is still trapped in the year that I bought it and what the money was worth at that time. So looking at, development, I have options at the moment. Like throughout my portfolio, here in Sydney, I've got probably about 200,000 square metres of land. Some of it's prime redevelopment land, some of it will be getting, ready for rezoning in the next couple of years. And with those properties, I could be building on some of them right now, right this minute, chopping them up, building 30, 40 houses on a site, building some blocks of units. In the Gold Coast, for example, Southport's the CBD of the Gold Coast. I have an acre of land in the CBD of the Gold Coast that I could be building 200 units on right at this moment, but I'm not. And the reason being is, one, it's not in line with my strategy today. Two, I see better value in buying new assets. Three, the numbers just don't stack up at this point to be able to make it happen. So there will be a point where my cash flow gets to a level where I'm like, okay, I'll just build these assets cash. A block of units will take a year to build. We'll save up, $10 million to build the block of units over the course of the next year. But at this point, I'm not in the business of buying the property, doing all the work, getting it ready for development, then having to sell off half the properties, and then sitting there going, wow, I made $2 million or $3 million or whatever the case may be, because I won't have the asset anymore. And what that profit that I get in, I'll have to pay taxes. I will lose purchasing power due to inflation, and the currency will be devalued. So I'm all about buying assets that are going to keep going up and providing new cash flows. So, for example, if I was to build a block of units and it was going to cost me $10 million to build that said block of units, in the same token, I could go and buy 10 motels for $1 million each and bring myself in another $2 million a year worth of cash flow. So from a perspective of, do I do a development or do I keep building my asset base? All I'm going to be doing is developing on an asset, having to either resell some of those properties, get a loan for some of those properties, whatever the case may be, or I can just continuously add to my portfolio. I said to everyone I want to be a billionaire by the age of 40. Being a billionaire by the age of 40 requires me to have X amount of assets under my belt for me to be able to, meet that status. So, looking at development, I'm not about churning properties. I'm not an active investor. I will happily do the hard work to acquire an asset, but I'm actually a lazy investor when it comes to investing. I'm just like, okay, set and forget it. I want those profits to come through. So as for sort of where my portfolio is at the moment, I've made the position that I'm not a developer. There is some developers out there that are very, very good. There's some developers out there that are very poor. For me, I'm an investor. I collect assets. Those assets go up in value. The cash flow keeps flowing through. I'm not in the business of selling off stock. I don't build a product to sell it. That's not my game. People are chasing dollars by doing that. I'm not chasing dollars. I'm chasing assets. I want assets in my portfolio. So it's a big difference. So you need to work out as an investor, what is my overall strategy? How am I going to get to financial freedom? I think back, I was talking to my mum about this the other day. My mum and dad bought their house. It was a 3-bedroom red brick house about 53 years ago in Parramatta in Sydney. And they paid $13,000 for that property. The property would now be worth about $1.4 million. If they sold that property off the day that they bought it, they could have bought it for $13,000 and it'd still be worth $13,000, and they could have sold it for $50,000. They would have tripled their money. At the time, my father, 53 years ago, would have been on about $2,000 a year, sorry. So it would have been like, getting 10, 15 years worth of profit if they were to sell it for $50,000. So if you made $30,000 profit 55 years ago in that period of time, what would that money have bought, or that currency have bought at the time? That could have bought 15 years of his labour. That could have bought multiple amount of cars. It could have done many different things. But if you bought that, $30,000 profit into the future, into 2021, what would $30,000 profit be, or $35,000 profit be? I used to say that you wouldn't be able to buy a Toyota Camry for it. You wouldn't even be able to buy a Toyota Yaris now for that money. So the reality is that value of that currency has lost all of its value. But if you own the asset, and you still had the debt of $13,000 if you got a 100% loan, which they didn't do back then. But if you had a loan for 100% of the value, you would have a $13,000 loan. 6 months worth of rent would pay out that mortgage, and the stamp duty for an incoming buyer to buy that property today, they'd be paying like $35,000, $40,000 worth of stamp duty just to acquire that asset. So that is how far we've had removal from the value of our currency. So looking at building, developing properties and sell them, you can sell them for a profit, but my game is not making currency or money. I don't care about pieces of plastic with dead criminals printed on it. I care about owning the assets that are going to keep bringing in perpetuity cash flow, and that debt. Like I was talking to my mate Daniel the other day, my ex-business partner Dan, and I sent him a link to a property out in Mount Druitt. I think it was in Shelby or Hebersham. There was a couple of them I sent over, and they were like $850,000, $900,000. And he's like, what the fuck, man? How come they're $850,000, $900,000? And I was like, look, it's a sign of the market, etc. And we laughed because going back 15 years ago, people used to laugh at us and saying, you're going to go broke for buying these crappy little properties in Western Sydney. They're going to go down. They're not going to go up in value, etc. Those properties, let's say that we bought something for $200,000, we owe $150,000 on them, they're now worth $900,000. That means that we've got a $150,000 loan with a $900,000 asset. Will it keep going up? Will it fall? Whatever. Who knows what will be in for the future. But the value, the intrinsic value of the asset can never come back down to where the debt that we owe on it is, because currency has lost all its value. So for me as an investor, I'm all about collecting those assets and seeing them go up in value. As I mentioned beforehand, I do have 200,000 square metres of land in Sydney. I've got an acre of land in the heart of the Gold Coast. There's lots of development potential properties that I've got throughout my portfolio. They're just things that I've collected over the years. I've seen this is good value on the day of buying the asset. It fits into the future of my portfolio. But to be an active developer or, building these properties is not in line with my, where I'm at today. We're going through hyperinflation at the moment. Whether you like it or not, you can really start to see that, I remember when you could go to a shop like the Reject Shop or whatever, and you would see, $2, everything in the shop, $2. It's a discount store, right? There's no such shop that sells anything for $2. A packet of chewing gum is more than $2. I went into Woolworths recently and I was getting a bottle of juice or something. I was like looking at all these different selections of juice, and I'm like, $5 is like the staple sort of price for anything inside of Woolworths now. That's just to get a bit of food into your body and nutrition. To feed yourself is $20, $30 to go out somewhere minimum. So we're seeing inflation really ramp up. The thing with developing is that when you're building an asset, if you've got to spend 12 months building an asset and then you sell that property off, you collect some cash, but generally everything has risen in that market because the cash has lost its value. Throughout that 12-month period, if you let's say that you had no assets today, you bought a property, you develop it, and then you sell it. There's all the risks, the moving parts, the council, the cost of construction could have gone up. If you bought a property 12 months, 24 months ago thinking to build a house on it, the house has probably gone up by 30% over the last 12 months to build. When you come to the end of the project, you could make $100,000, you could make $200,000, but if you had just bought an existing property, that would have been sucked up with inflation anyway. So there's no real value. But when you sell that project off, you buy the property, you build 1 unit, 2 units, 3 units, 5 units, whatever the case may be, you sell them off, you make a profit, great. Everyone's there ready to take their piece of the pie, the developer, the real estate agent, the tax ATO, the real estate agents, everyone's there to collect their paycheck, but you're just going to have some cash that's not going to buy you as much into the future. But most importantly, you buy the land, you build, you sell it, you have no asset. All you have is digits in the system. You can't even get the paper money anymore, because if you go to the bank and say, I want more than $10,000, they treat you like you're a criminal. So that money is trapped in there. You don't even control it. That's a different story for a different podcast. But looking at the value of that asset, if the market has gone up, anything would have gone up, right? Most importantly, you don't own an asset anymore. So you go to the end of the year, or you go 2 years, you go through that project, you've got some cash. That cash can't buy you as much as what it could have. and you don't have any asset, right? And I'm all about controlling the assets and taking those assets through inflationary cycles. I talk about it as to why I bought motels and why I got into the motel game. It's not because I want to be a motelier. It's not because it doesn't come without a lot of risk. It does come with a lot of risk. It's not just a property. You've got businesses. You've got lots of moving parts on top of it that have to be very carefully orchestrated. But the reason why I started buying motel and those sort of hospitality and tourism pieces of real estate is that the value of what I get is far greater than what it would cost to build. And there's not many markets out there where you can get greater asset value for what it would cost to build. I was joking to one of my mates the other day, it's either going to be a very big payday for me or, these guys are strapping dynamite to me that are selling the things. And I look at the core value. You've got a piece of land that's underneath the property. That has a value. You've got the asset that gets built on top of it. If anyone wants to be a competitor to one of those sites, they can't rebuild what I now have without spending 5 times more to do the building. So I bought one of my motels, which is a very good asset. I paid $700,000 for it. It's like 30-room motel, very, very good value. So it's like $20,000 a unit. I just bought another acre of land beside it, and this acre of land was a couple $100,000. And I'm in the process of working out to build maybe 20 cabins on the property. And I think to myself, how much would it cost me to put 20 cabins there? The 20 cabins might cost me $80,000 a piece to put on, and they need to be cyclone rated and all these sorts of things, all the headaches, the pain to come with it. But these cabins would cost me maybe $2 million to build into the side. I just bought a whole motel for much cheaper. So I've got the land. I can do that later. I can turn it into a caravan park for the moment. I can do certain different things with the property. But I've got the land, but I'm choosing not to build the development on it because I'd rather deploy that capital in buying more undervalued infrastructure. So people say that, the land goes up in value, the buildings go down in value. I actually believe the opposite. The cost of building has gone up. The cost of copper pipes, the cost of plumbing, the cost of trades, the cost of bricks, the cost of timber, the cost of steel for the roof, the frame, whatever materials you're putting into the property has gone up massive over the course of the last 24 months. So, I'm not in the business of I guess what I'm trying to say out of all of this is that I'm an investor. I know my position in what I'm doing. I'm not trying to be a developer. I'm not taking my eye off the ball of what I need to do. I'm an investor. I need to accumulate assets. If those assets lay themselves over for the future for me to be able to develop on, then that's great. But I'm not someone that's trying to flick through a property, go to a course, go to a seminar, get hyped up by something to go and, build an asset to sell it off and make a few dollars. I'm about building wealth, intergenerational wealth. And for me, there is times when developing is good value, but at this point it's not. Going back maybe about 5 years ago when we saw a glut in the market, there was an opportunity to pick up some cheap blocks of land and to be able to build cheap and to build value into the asset. And those properties ended up being good, solid foundation properties in a portfolio. But in today's market, when you're building properties and it's going to cost you, hundreds of thousands of dollars just to build a very small property, like a granny flat, for example. I did talk about granny flats beforehand. I see so many people say to me, I want to buy a block of land and I want to put a granny flat on it. So let's say you go out and you buy a house in Western Sydney for $800,000 or $900,000, granny flat ready so you can put one on. You're going to spend another $200 for a granny flat. People are paying $170,000 for a fucking granny flat. Like, let's just put that into perspective, right? $170,000 for a granny flat. It is not the market to be building granny flats, right? You go and spend $800,000 for a property, spend $200,000 on a granny flat. You're into it for $1 million, and you're going to get some half-assed return of like $500 a week or $600 a week combined for the house and the granny flat. You have overcapitalized on the asset, you've overcapitalized on the land, and you can't even split them up and sell them. So you've got massive risk attached to that one asset because you've spent much more on that one site. For me, if I was going to spend $170,000 on a granny flat, I'd rather spend $170,000 and go and buy myself a whole new piece of real estate, whether it be a house, a townhouse, a duplex, a unit, whatever the case may be, I'd rather go and buy myself a whole new asset rather than, overcapitalize on that one property. So for me, I don't care, if it's a unit, a house, wherever it's located, whatever it is, if the value is in that asset, if I can't rebuild the value of that asset, if there's a demand for that market, if I'm buying it below replacement cost, if I'm buying it below market value, it's giving me a solid rental return, I'd rather take a cash flow to help me, move forward and put my portfolio to where it needs to be. As for the future, as to what I plan on doing with my property portfolio, I plan on at some point developing. I see myself, once I've got X amount of cash flow coming through from my portfolio, which is never enough, right? That's the funny thing. There's never enough cash flow in my portfolio. I wish I had more properties. I wish I had more assets. Doesn't matter if I've got 1,000. I'll still be saying I wish I had 5,000. I wish they could be doing more for me. But I know that I'm in a very good position due to the actions that I've taken. I've just built an asset base. I just collect assets that collect cash flow, and that cash flow comes down, and then I can go and do more things with them. Work out whether you want to be that active investor that has to perform the trick. If you buy a property, you develop it, you sell it, you have no property, you've got a little bit of cash, you can't buy that asset again that you bought beforehand because the market has gone up, and then you have to go and perform the task again. Very similar as to why I don't buy and flip real estate, because I won't look back in the future and say, I'm so glad I sold that property for 500 grand because the property would be worth $1 or $2 million. It'll be like, shit, I wish I still owned it. So my net worth, my value of my asset position will continue to grow due to inflation. As for when I will develop, that's a good question. I don't actually have a time as to when, but it would be when I see the value in doing the development. Maybe when I'm locked out of the property market. Maybe if prices go too high, I could look back to the assets that I've bought and then add more value at that point in time. But for this point, I'm out there accumulating assets, building my net wealth position, building my cash flow position up higher and higher every week. So I guess as an investor, I always say have clarity, have a roadmap as to where you're trying to go to. Understand as a business, what is your position? What are you trying to achieve? If we look at McDonald's, for example, McDonald's sell a very substandard sort of burger, right? I don't want Macca's to come and sue me, but I think we can all agree that we could build a nice, chunkier, beefier burger. There's places that have better tasting burgers out there than McDonald's do. However, McDonald's have got a very successful business. You don't see McDonald's go, okay, well, Pizza Hut makes lots of money from selling pizzas, so what we should do is we should sell pizzas through our drive-through. Their core business is that they sell cheap hamburgers and cheap chips and Coke and, out of a tap, and they hand you the cup of Coke, whatever the case may be. That's their core business model. They have clarity around their business plan, they have clarity around their strategy, and they run their business in line with that. As an investor, you need to work out what is your business strategy, what is your investment strategy, how are you going to get to your end goal, how is this portfolio going to be sustainable for you? Are you a builder? Are you a developer that's going to be going out there buying properties and keep having to redo that exercise over and over? Or are you building out an asset base which is of good properties that are going to bring in cash flow week after week, day after day, and continue to go up with inflation? So for me, it's very clear as to what I think is best for myself and what I've been doing for myself, and that's to have a nice, solid asset base that keeps bringing in cash flow, growth, equity, and capital. So on that note, guys and girls, I think we're at a wrap for this week's episode. If you do need help working out your strategy, where to start, where you're at, if you're confused, if you're stuck, if you go, is development for me? We can help you with development. We can help you on that road of, finding the properties and structuring your portfolio into funding your development and all that sort of stuff. You can still reach out to us. But for me, I'm just a buy and hold investor. If you need help on building that strategy, reach out to my team, 1300 367 925. Send us an email at admin@binvested.com.au. Book yourself in for a free discovery session with one of my staff, and let's see how we can build wealth, whether it's for this year, next year, or future generations. We'll catch up soon. Have a great day, and thanks again for listening. You can always catch us on Apple Play, Google, Google Play, Spotify, YouTube, and make sure to give us a thumbs up and to subscribe and share it with your friends and family. We'll catch up soon. Have a great day. Bye for now.
Yeah, like Bilal said, man, we're stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated. This my 2 cents, don't care if you save it. Joint be decentralized and you will see you been lied to the whole time, and it's the irony, cause they do the exact opposite. You become a slave to the system, enough your money, all they do is profit. There's no conspiracy theory, you better hear me. Crypto will set you free before the system does. I don't care if you do or you don't, but what I'm saying is the truth to the reason you choke. I've never been a failure, excuse my behavior. Keep talking, haters doing me a favor. They all tell lies, I know what they been telling you. I'm the opposite of Donald Trump of Australia. It's amazing, here for the taking. My time is never wasted, just getting wasted. These girls say I'm really breathtaking. I can't help it if I really